Hello everyone and welcome back to the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the M1 Finance account. We're going to go over the 16th to the 20th of May 2022. We're going to go ahead and go over number one, the overall performance of the portfolio. We have some new positions in the red today. Well, as of this week, so we're going to go ahead and cover a few of those. Number two, we're going to go ahead and cover the weekly performance in comparison to the main indexes. So we're going to take a look at the S&P 500, the Dow Jones, the NASDAQ, and take a look at the entire S&P 500 as a whole, what companies were up, what companies were down, what sectors were strong and what sectors were weak, and how did our portfolio do. Number three, we're going to go over the past buys, sells, and dividends. I don't think I made a video last week on the performance. I kind of forgot. And we're going to go ahead and cover how the portfolio has been going. But just like the rest of the market, it has been pretty red. You know, we started about a month ago in the red, and it's just been red across the board ever since. And then number four, we're going to be doing an update of our dividend tracker because we have sold out of 4 positions last week. We added into 4 positions and added a brand new position. So we're going to be going through and updating our dividend tracker. That way you guys can also follow along if you guys have companies that you want to track dividends with. You can go ahead and check out this amazing site. And yeah, let's go ahead and get into it, okay? So starting off at number one, we're going to be jumping over into the M1 Finance account right here. We can see that we have $325 in buying power. So I don't think we bought anything last week. We kind of bought and sold a little bit, but we haven't bought anything recently. So overall, we're still up. We're up 47.09%. Market gains are 4,805. So at a high, I can't remember. It may have been at a high of like $6,000. So we have pulled back slightly. I think our all-time high here in the portfolio was around nearly $44,000. So we have pulled back slightly here off those highs. But overall, our earned dividends are growing week after week, month after month. It wasn't too long ago that we had hit $3,000 in earned dividends. Now we're hitting nearly $3,300 of earned dividends. So soon we will be hitting, $3,500 and $4,000. And soon our earned dividends will actually overtake our market gains depending on how long this market stays kind of, corrected or depressed, right? So let's take a look at our overall performance. Our overall performance, we have Apple in the lead, still has been in the lead for quite a while here. Second place, we have AbbVie, ABM Industries in third. So these ones have been battling out here pretty often. There was a time when Main Street Capital was up in the second, third place. We even had, I think the Lowe's was up here as well. Lowe's has definitely pulled back pretty hard. I believe couple months ago, there was a time when Lowe's was up in this area. Lockheed Martin was also up here. So these companies go back and forth, kind of battling out for, top positions. Down in the bottom, we have some new positions in the red. So this is pretty exciting. It has been a long time since we've had any red in the portfolio. For the longest time, all we had was Clorox and Starbucks. Now we have Innovative Properties, we have Stanley Black & Decker, Digital Realty Trust, Colgate, Waste Management, and a few others. If we want to see, these are kind of barely hanging on. Siggy, for example, it shows up 4.10%. Okay, it is actually up 4.10%. Some of these, sometimes the market gain is actually negative, and the only reason it's positive is because the earned dividends overtook the market gain, but that is not the case. It looks like in this. Here is a good example. JP Morgan, right? This is showing up 7.17% for returns, but in reality, market gain wise, it is negative by $30.61, whereas the dividends that this company has paid out is $72.23. So it looks net positive, and it does offer a 3.29% starting yield on Chase, JP Morgan Chase. So that's a pretty good starting yield on one of the biggest and strongest banks out there, right? So I think that's pretty good. I think that's on my buy list potentially, but we'll talk about the buy list here in another video. So that is the overall performance of the portfolio. Now jumping into the weekly performance. Now this was a really brutal week here. We started off pretty strong here on Monday, Tuesday. So on the 16th, that was on Monday, 17th was a Tuesday, and then the market just sold off into the week, right? So for the week, we are down a whopping 3.5%. This week alone, we lost 1,500 bucks. We didn't earn any dividends this week, so yeah, nothing there to kind of spare those returns. This is straight loss on the week. Now, our biggest winners and our biggest losers on the week were Pfizer up a nice 5.11%, Merck up 3.47. So you already know what's on the news recently. There's the uprising of the 2020, 2021 all happening again. There's like the potential for, relapse of lockdowns and all that stuff. Is kind of interesting to kind of, hear and be discussed. We have ABM Industries, Realty Income, and J&J. That is it. A couple of pharmaceuticals, healthcare, REIT, and ABM Industries. I don't know where I would chalk that up into, but that is it for the green. Everything else in this portfolio is straight red. With Cisco, I told myself weeks ago, like I literally told myself months ago that they were losing market share. This company wasn't going to be holding up. I keep telling myself I was going to sell, but I just never sold. And now in a week, it's down 13.36%. I don't know at this point, should I sell it? I don't know. If there's a better opportunity for the money, potentially, but still, I'm going to hold on to it. And I'll probably, go through this whole process of talking about it later again. Clorox here down 12.62%. Clorox had been doing really well recently. They had been going up, and then Target and Walmart and many other retail companies came out with their numbers. They weren't able to raise prices to match or beat inflation. Companies like Costco were able to, there was a company out there, I don't think it was Costco, I think it was like Home Depot and Lowe's, or it may have just been Home Depot, where they were able to raise prices X amount and increase their net sales. So even though inflation was at high at 8% and they weren't able to raise their prices as high, or maybe they were able to raise prices as high, there was some little similarity there where a Home Depot or Lowe's, one of those companies, was able to offset the price being, the demand became lower, so they raised prices to overcome the demand, or they kept prices low, but the demand was high and overcame the rate of inflation. So there was something that was positive with Home Depot that was out there. But that is not the case in a lot of these other retail companies. So Hormel Food dropped like a bucket. Clorox, that's a retail brand within the company, the stores there. So that felt like a bucket there as well. And many others here. Lowe's down 4.8. Not as bad as some of these other ones, but still pretty brutal. So that is the weekly performance in the portfolio. Now, how did we do in comparison to the indexes here? The S&P 500 put on gains on Monday and Tuesday. Almost, it kind of looks like a gain here Monday, but it actually closed negative and then reopened on Tuesday high, and then closed for the day even higher at 2.02%. For a pretty nice gain. And then similar to my portfolio, just continue to sell off throughout the entire Wednesday and Thursday, basically selling off anything that had any chance of being green and recovering. And then Friday, we just had a flat day. Nobody was willing to buy. No one was really selling. We see big movements here after hours. This is where it's happening. After hours, the market's, buying it up. It's basically starting up 2% on the day and then ending up 2%. And then big flow here where big sell-off and then just kind of continues. This was probably like another bit of a sell-off versus the buy. So it didn't really help anything out. Large volumes here, mostly during the end of the day versus intraday. So pretty interesting there. The Dow Jones down 2.9%. The NASDAQ here down 3.8%. And the Russell down 1%. So this is kind of interesting. We're seeing those mid, small cap companies kind of slow down. They're down 21.02%. NASDAQ is down 27.42%. The Dow Jones down 13.97%. And the S&P 500 down 18.14%. At a point on Friday, it was down 20%, which was in correction territory. It's still, it's actually below 10%, It's in correction territory. I forgot what the other, there's like a recession territory, is like 20%, or maybe that's like the GDP. GDP went already through the first quarter being negative, so we're just kind of waiting on those results to see on the next quarter if we're truly in a recession. But there's a lot of negativity out there that's more on the negative side versus the positive side. So our portfolio did get beat up much more than the indexes this last week. So that's fine. You know, that just presents opportunity. I'm looking at this as it's a presentable opportunity. There are now companies that I would like to add into, similar to Waste Management. This is a company that I recently started up. I am not done getting it to $2,000 worth of equity, so this is one I'm going to use this time right now while it's beat up here to add money into it. Colgate, probably just kind of relax off that one. Digital Realty Trust, I'd like to add more money into this one. IIPR, I'd like to add more money into that. Take a look at that loss. This is all over the last month or so. Big loss within the month, so pretty interesting. Starbucks, of course, one I've been kind of adding to here in the short term. So definitely opportunity out there versus where you just don't have the opportunity. You can't just throw money in the market and have it make money right now. It's more like, hey, you have opportunity right now to throw money at the market, and later on, you're going to be compensated when it returns and goes higher if you're investing in solid companies, right? So that's always the thing, the kicker. So our activity, right? Our activity over the past few weeks. So we didn't make a video the week prior on the 9th. So we had these buys and sells here. So this is where we did our video. We did our video the last week where we went over here. 4 stocks that I'm buying and selling. So 4 dividend stocks I'm buying and selling, of course. I made that video. So here we went through and we removed Starbucks, JP Morgan, Waste. Oh no, this is our buy. So we removed $500 of Merck, $500 of Lockheed Martin, $500 of Pfizer, and we completely sold out of Method Electronics. We just kind of removed that out of our portfolio, and we moved the money into Starbucks, JP Morgan, Waste Management, and Avery Dennison. And then here is where I completely removed that company from my pie. So we just kind of sold it out 100%. From that point, we have had, let me bust out my handy dandy calculator, and we have had Apple pay out $3.90. We have had Clorox pay $13.16. We had Colgate paying $11.38. These are all quarterly right there. Those are all quarterly payments that'll get paid out again in 2 more times this year. Main Street Capital is a monthly company right there, so that pays out $8.54 every single month. Realty Income there, $6.78. That's another monthly one, so that's every single month I'm getting paid right out of that one. Avi here is a quarterly one, so that's $11.54. I'm going to get paid 2 additional times. That's a 25811 paying company per month, so they pay out every February, May, August, and November. So that's $11.54, and then what did it pop over here? And then the last one there is Hormel Foods at $12.14. So just over the last 2 weeks, we have made $67.44 in dividends. We haven't bought anything since we've had all these dividends roll in. Plus, we've added $127.66 twice. So that is where we have this money here, $325.79 to invest. So we're definitely going to be investing that. We have a opportunity here. We're down 3.5% on the week. So really quickly, let's jump over to trackourdividends.com. We're taking a look at the M1 Finance portfolio, and right now the portfolio is offering a 2.9% yield. The yield on cost is 3.24. The annual income is 1,181. But this is all prior to the changes. You can see here that our value is the 40,157. Here it's 40,014. So this is what it would be if we hadn't made any changes. But we did make changes the last few weeks there. Remember, we bought and sold. So we're going to go through and alter the 4 companies that we sold. So number 1, we sold Merck. We sold a bit of Merck here. So Merck, we now have 19,55471 shares. And the cost per share, the average price there is $75.97. So we're going to do the exact same thing over here. Look up Merck. So here, all we're doing here is reducing our cost basis here. We are going to lose the dividend income of 69.78. So our shares dropped here from 25 point some to 19.55. 471, and our cost per share went down to $75.97. So we're going from 69.78 to 53.97. So we did lose a little bit of income right there, but that's okay. We're going to go ahead and readjust this. We'll look at the numbers once everything is readjusted, okay? So jumping back over to M1 Finance, the next company we removed a little bit of was Lockheed Martin. We now have 5.16304 shares, and our average price is $342.55. So we go over here and do the exact same thing. Lockheed Martin, we reduce our share count from 6.2 to now 5.16304, and our cost per share went up in this case. So we went to 342 and 55 cents. So our income from that company went from 70.40 to now 57.83. So we did dip a little bit right there as well. You know, obviously we're going to be dipping because we're selling out of companies. Pfizer here, that one was readjusted as well. So we're now at 31.81469, and our cost basis there per share is 37.38. So we go to Pfizer right here. We did, I don't want to remove it from the portfolio. I just want to edit the shares. So we're down to 31. We basically shaved 11 shares here. 31.81469. And our cost per share went down here pretty good. We went from 41.69 to 37.38. So our cost per share actually dropped there by taking profits on Pfizer there. That was better off. And the last one that we're going to be completely removing out of portfolio, we don't even have to leave this one in here. We're just going to go ahead and delete it out of the portfolio because it is no longer a holding that we're holding within our portfolio, right? Now to the positions that we added to. Our Starbucks position, we added to Starbucks. So Starbucks in this example, we now have 25.76829 shares, and our cost basis is 84.80. So let's go ahead and track over here. We're going to be looking up Starbucks, and we can see here our shares went from 21.16 to 25.76829, and our cost per share went from 86.77 to 84.80. So it actually dropped pretty nicely, and we can see our income here. Watch that income, $41.47 to now $50.51. Now we jump over to JP Morgan. JP Morgan, we now own 12.4289 shares at a cost basis of $119.81. So let's go ahead and record these here. We're just going to go ahead and do waste management as well. That way I'm not jumping back and forth. We're just going to go ahead and record. Waste management is right here. It is 8.28423, and our cost per share is 159.87. And then the last one here is Avery Dennison, ticker symbol AVY, and we own 9.92659 shares at a cost basis of 153.58. Okay, now we have this information. We can jump over here and jump over to JP Morgan. So here, for example, we went from 8 shares, 8.33 to 12.4289, 12.40289, yep. And our cost per share went up. We did buy up on JP Morgan last week. That's fine. We went to 119.81. And that is correct. That's all updated. Waste management was a new position. So we'll add that one here in just a second. Let's go ahead and skip to ABY. And we'll add some shares to this. We went from 7 shares to 9.92659. And 153, what was it before? Oh, we went up pretty big on that one. We went to 153.58. So Avery Dennison went from 21.29 to 29.78. Now we're adding a new position in here. So we're going to go ahead and add a position here, add a holding. So let's click add holding. We're going to be adding waste management. Whoops, let's go back and select that. The number of shares, I own 8.28423, and our cost per share is 159.87. Just like that. We're going to go ahead and add that holding. And now this should be correct, I believe. 41.57. But all in all, I think the portfolio changed for the better. We did move from companies that were a little bit more high risk. You know, we took profits on Merck. Even though Merck did really well this past week, there's a point where Merck isn't going to be able to climb anymore. If we look at Merck over the last week here, they're up 3.47%. But how long can they keep this up? This is the reason this dropped, is because I took profits. Otherwise, they would have ticked up just a little bit more. So I'm just kind of taking profits on Merck beforehand. Lockheed Martin is kind of like in the same boat, and Pfizer. These companies are doing well right now, but there's going to be times and periods where they're just going to not do so well. And that's, I'm just kind of moving money from companies that are doing really well right now, that are peaking near all-time highs, and move it into companies that can do more returns with it later on. That's kind of like the flow there. So with that said, I think that's going to be it for this video. We'll go ahead and end this with the 1 week, the weekly performance here. We can kind of see what companies were strong, what companies were weak, what sectors were strong, what sectors were weak. Obviously, tech, communications, consumer cynical, consumer defensive, were all across the board red. Some of the big things that really stood out this past week was the fall of Costco, Target, Walmart, Procter & Gamble, Coca-Cola, Pepsi, Kimberly-Clark, Clorox. These companies that had been like the consumer, they had been where the money was flowing to. Money was flowing to these companies for quite a while. If we look at the month here, yeah, look at how red these are. Just this week alone kind of blew these companies down. If you had looked at these companies over the last, if it wasn't for this week and you had looked at these companies, they would have been pretty solid in the green. But this 1 week completely blasted these companies pretty bad. Tesla here is down at $663. That is crazy. Just to see Tesla be cut in half. They were trading in over the thousands. Now they're trading at 663, and getting down even further. Where's the stopping point on Amazon? Where's the stopping on Tesla? These companies just kind of getting pretty brutalized. So it's really interesting. We can see the positive companies. Oil, energy has always been doing really well this past year. I would have a really hard time getting into oil at this time. I had owned Chevron in the past, but had sold out of it, and it's definitely well to be diversified, but Chevron had been beat up so much during the time frame that I owned it that it didn't do anything. And here we are going through a market where Chevron couldn't have any negative days. If it does have a negative day, it's barely down anything on the week. Exxon's kind of like the same way. That these companies have just been blasting off to new all-time highs here. Also healthcare, so if you own any healthcare in your portfolio, healthcare plans, medical devices, diagnostics, that's pretty much, if you've invested in some of the main companies outside of AbbVie had been high and fly for quite a while, topping off around 160 and kind of pulling back. I think I took profits on that one, but Pfizer's done really well, Merck's done really well, many of these others have done really well. Financials are kind of mixed. PayPal kind of found a bottom, right? Down in $80 from highs of, I don't know, $300 potentially, $200, $300. MasterCard up 1.02. So there's not a lot of safety outside of energy and healthcare. And utilities are kind of mixed as well. I feel like utilities are always kind of mixed. There's never really, in the short term, I haven't seen a lot of utilities be positive. I know companies here locally were expecting utilities to go up by 14% because of inflation and all that stuff. So we'll see how that all kind of goes into the quarters ahead. But that is going to be it for this video. I hope everyone has a great day. I hope everyone has a good week, month ahead of them. You know, stay strong, stay invested, continue to dollar cost average is going to be your best bet, because you never know when it's going to turn around. And when it does turn around, it goes quickly. You think these days and weeks where it's down 6% goes quick? Well, the recovery can be much faster. It feels like it's just hurting because it's like a slow peeling band-aid when it's bleeding out. But when it fully recovers, it bounces back quick. You know, if we take a look at the S&P 500 here, the recovery way back when, let's look at 3 years ago. You know, that felt a really long time. Like this whole bleed off here. Let me go, let's go from here, go February, right here. Let's go back to January. Yeah, this all felt like it happened very quickly. It started happening in February. We had a little bit of a top off about midpoint February, and just from February into April, it just felt like it was going down, 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 down. That was essentially February was the second month. April is what this April, May, so it's the fourth month. So about 2 or 2.5, 2 months of straight red essentially. And then it didn't even feel like it was starting to recover. People were still very antsy to get back into the market, and they just missed the opportunity. So they had a huge, huge recovery here. Just within a couple of days, just kind of bounced back very quickly. You know, people didn't think it was going to come back as strong as it did. It had another huge recovery up. And then now it kind of had like these slow little periods of kind of trending up and down, and people are kind of maybe iffing and thenning. Should I invest? Should I not? Oh, here's the drop. Maybe I shouldn't invest. It's going to fall back again. And then it just kind of continues heading higher and higher and higher. And then here we are over this time frame from 2020 up until 2022. We're still higher than where we are way back when. But where is our bottom right now? We do not know. But we don't know when it will stop either. So that is going to be it for this video. Hopefully everybody's having fun, not looking at their portfolio all day. I know I'm not. I don't really look at my portfolios very often unless I'm doing some trades in my options account, over on Narrow Edge. But let me know down in the comment section below, what are you buying? What are you selling? What are you interested in getting into or, not getting into? Let me know down in the comment section below. And that is going to be it for this video. Appreciate everyone tuning in today, and I will see you guys in the next video. Bye-bye.